Welcome to episode 21. Today we are going to talk about Adobe, which trades on the NASDAQ Stock Exchange under ticker symbol ADBE. Before we get started, just a quick reminder to check out stockmarketideaspodcast.com. In case you're curious about a couple of the resources that I use to do my research, that's stockmarketideaspodcast.com. All right, let's get started.
Welcome to the Stock Market Ideas Podcast, where we discuss value investing and long-term investment ideas. Make sure to subscribe, and you'll get all of our most up-to-date episodes with investment ideas you should be thinking about. Here's your host, Ted Vilas.
Hello and welcome back. Thank you for taking the time to join me for another episode. Today, I'd like to get into a little bit of a discussion around Adobe. In case you haven't heard of Adobe, which chances are you probably have, most people are familiar with at least one of its software products, which include Adobe Photoshop, Adobe Illustrator, Adobe Acrobat or Acrobat Reader for PDF files. And these are just a few of the creative applications where this software giant tends to be a leader. Adobe got its start back in 1982, and since starting out as a pioneer in the software industry with Illustrator as a very basic drawing program, it has continued to grow into a leading software company that you see today. Now, before I get into talking about the quality of this company and then the valuation, I thought you might find it interesting to know how I came across this idea recently. I saw a clip on Mad Money of Jim Cramer talking about Adobe, and he literally called the company undervalued in his opinion. But I thought it was very interesting that on the same segment where he's discussing how he feels Adobe is undervalued, he also shared that he feels the price will continue to go down, and if anybody is thinking about buying Adobe shares, they should wait. I found this a little bit perplexing because almost by definition, if somebody feels that a company is undervalued, unless there is another investment idea or an alternative where capital or cash is being used to invest or to do something else, we should basically be buying shares of that company, in this case Adobe, because otherwise we are trying to time the market anytime we are trying to assume or estimate when price will continue to go down or continue to go up for that matter in the short term. So that made me want to look into Adobe in a little bit more detail just to determine for myself if I think it would be a good investment and if it's actually undervalued and worth potentially buying today. Now, one of the biggest things that you'll notice in the media that has been having an impact on Adobe stock and will probably continue to do so going forward is the $20 billion acquisition that Adobe is currently making for the software company Figma. I won't get into this acquisition in very much detail, but anybody who's actually looking to buy shares in Adobe should look into this acquisition and form an opinion as to whether or not you want to own shares based on what's happening with this acquisition right now. In my opinion, with Adobe's $157 billion market cap, and at least at a very basic glance, Figma does appear to complement Adobe's product offering. To me personally, it might not make a huge difference in my final opinion if this deal goes through or not as to whether or not I would buy shares in Adobe. Next, let's look at the quality of this company with a few different metrics that tell us just how strong this business is and how reliable it can be in the years going forward from today, before finally taking a look at valuation. First of all, Adobe's financial strength appears to be very strong. When we look at a cash position over $6 billion and debt at around $4.6 billion, although it would be nice to have a little bit less debt in a rising interest rate environment, this is actually a fairly decent position. And when we look at a very positive return on invested capital of around 20% and a weighted average cost of capital of just over 7.5%, we can see that Adobe is in a healthy financial position right now. What's even better is if we move on to looking at profitability. Adobe is extremely profitable with a gross profit margin above 87%. This is not unlike many software companies, and it tells us right away that Adobe has very good pricing power with its products and services. If we take a step back, this actually makes a lot of sense for probably the vast majority of its users who use its creative products for everything from video editing, marketing, publishing, and every other creative capacity that you can think of. They probably view the software that they're using as extremely important and almost irreplaceable to many of these users. So while there certainly is competition in this space from other software makers, Adobe really is able to create a moat that ultimately makes it a very profitable business. I should also point out that not only is Adobe very profitable today with over 87% gross profit margin, it has maintained very high gross profit margins in this range and even higher for at least the past 20 years. And this history and longevity matters quite a lot when we're trying to look at valuation in order to see that we can probably trust this company going forward as a long-term investment. Now, in relative terms, if you look at simply the stock price going back since it became a public company, you would see that Adobe was very much a growth business and probably still is and will be for a while. Adobe is actually over 50% below its most recent high, which was around $688 in November of 2021. And that's actually a little bit similar to what we saw in the last episode where I talked about Microsoft. So at around $338 a share, Adobe still has a price to earnings ratio around 33.5 with a forward PE ratio of around 22. While this is higher than the overall market average, we really do need to keep in mind that this is still a business with a revenue growth rate going back 10 years of around 18.5%. And also very profitable, as we already mentioned. So based on what we've already seen throughout this company's history, we can probably safely determine that this company will continue to be successful for the coming years, if not longer. So based just on a few of these numbers that we've talked about, we can see that Adobe is a very high quality company and will probably continue to be successful in the long term. And it probably has been unfairly pulled down based on the overall sell-off in technology stocks. So depending on what you use as a discount rate when comparing this potential investment to other investments, and if you have an opinion about where the economy will go over the next 1 or 2 years, you may actually think that Adobe is quite undervalued at this point. And certainly while the stock price could decline from this point forward, it seems as though stock in Adobe is undervalued right now, and there are much worse things to do than to buy stock in Adobe at these prices. All right, thank you for taking the time to join me. I hope you found this helpful. Have a wonderful day and bye for now.
To make sure you get our most up-to-date stock market ideas, be sure to subscribe, rate, and review this podcast. Thank you for listening to another episode of Stock Market Ideas.